points on the lesson. Live in the hills, but it still get a spread. Started with a live, but it still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, but we are going to do this a little different. So we had the Fed minutes today, and it was very, very hyped, but nothing really came out of it. The reaction was actually unreal. We haven't seen anything like this. Again, here are my John Madden pictures. We were going over the stream. You could see most Fed minutes don't move. The last month, we had a big 3% reaction in 2 days. The time or a couple months in February, we also had another big reaction. But for the most part, things don't really move. And the thing about today, it started looking like one of the positive reactions. But by the end of the day, it kind of turned into nothing. So we got to talk about it, but based on what the Fed said, I got a good play to share with you guys. So we're going to go over that. I'm going to start with the plays. Then we're going to go over the quick recap. Again, not much happened from the minutes. We do have a data report on Friday with the jobs. And again, if you don't know, CPI is next week. And just for more context, if you don't remember, last May, it was the same exact thing. We were coming at the bottom. Minutes brought things up. We chilled out. And then after CPI, we started to come down again. So keep all that in mind because you do have more data next week. But now let's get into it. What is the secret trade and what is the thing? Again, it is based off of the minutes. And if you are listening, pretty much the basic rundown of the minutes here is the key. There was a hawkish tilt. There was not any new news that we got from it. And there was not any clarity as to whether the Fed will do 50 or 75 basis points next. Again, last Fed meeting, it was an absolute bazooka, but the minutes didn't give any clear-cut guidance as to, okay, based on this, they will do that again. But now, here's where it gets interesting. This minutes had the most references towards inflation in any report. I think it was like 93 mentions. However, there was not one mention of recession. So take a look at the bonds, take a look at the dollar. Again, everybody has kind of been worried about that. And it's, again, a lot has changed since the last Fed meeting, but they said nothing about it. And they were even talking about how their biggest goal is making sure inflation doesn't get entrenched. And that's why Powell did what he did. So what is this pretty much saying? If you haven't picked up on it, the simplest way to put this, until we get more data and hear from the Fed again, I do not think they are worried about recession, and chances are Powell is probably going to tighten more, and it will probably take a lot longer than people are expecting for Powell to pivot. Now, how does this relate to the plays and what is the plays? Based on this notion, we've talked about it. The dollar's been very strong. It kept going up. The way I'm looking at this is that it is probably going to be very, very bullish for the dollar as long as Powell and the Fed keeps approaching this mentality. So now what is the play? YCS in the yen or any other global currency. So if you don't remember YCS, I made a short on the yen. We've talked about it. The yen is weakening and it's at a very big 20-year level. But again, these are global currencies. Essentially, if the dollar keeps getting stronger, it is going to weaken everybody else. So you could play the yen, you could play the Europe, you could go after any currency, but some of the bigger ones will probably have a little bit more meat on the bone and they will respond to the dollar movements. But that is the secret play pretty much, because with the dollar going up a lot, premiums on that are expensive. There's a lot of uncertainty, and since some of these global currencies kind of moved a week or two ago, you could take a look at YCS. It is just staying pinned up there. The premiums have dropped considerably since the first time that we saw this. So what I'm trying to say here is if the Fed keeps confirming this mentality, they keep ignoring recession and keep saying, hey, we're going to do whatever it takes to bring down inflation, even if that means causing a recession, I think that will mean a lot of dollar strength. And we've talked about this pretty much up until the Fed is about to pivot. As long as the Fed keeps getting more and more tightening, the dollar should start to go up with it. So that's the first play. Hopefully that helps out there. Now let's jump a little bit back here to the keys. Again, I know I'm doing it different. I just wanted to make sure you got this, but like we said, nothing really new came from the report. We're going to see, and like I showed you from those John Madden charts there, pretty much based on what we saw in the last couple months. Again, the Fed minutes don't really cause a big reaction. So last time we saw anything like this, it either led to a 2% gain the next day or a drop of 1.5%. So we're going to see how it plays out. Again, I do think the data is going to be more important, and that's the final key. The jobs report on Friday will be very, very key. It'll give us an idea of wages and inflation, but now we are going to really see, okay, what is the health of the jobs market? Even though there wasn't that much new news in the minutes today, the jobs report might be able to piggyback off of it and give a little bit more insight. And essentially what you got to watch out for is if the jobs data is good, that is actually going to be bad. The hotter and tighter the jobs market, the worse it is, because that implies more Fed tightening, stronger dollar, weaker global currencies. And again, that leads into the play. So very straightforward. Again, I was pretty surprised. We were expecting a lot more bigger moves. That's why we'll see. The volume has been low. If you haven't noticed, I think we're trading below the 100-day volume average so far in this last week from the holiday. So we will see, but you are also entering one of the most bullish segments. And that's what we were talking about here in the beginning, where just get ready for the data. You have a lot of data next week. You got bank earnings and a couple of other ones kicking off. This is where a lot of things can happen. But now let's get back to the rest of the plays. I know I'm all over the place, but already went over the YCS, the second play. I grabbed this one today, ConocoPhillips. I made another oil play. I decided to go with the January 125 calls. I bought them at $1.40. They were able to go up throughout the day. We bought it at the literal bottom. But now, why did I buy this? It's funny. We talked about this earlier in the week, but there was a rumor today that U.S. and their allies will begin to put a price cap on Russian oil. And literally, if this happens, it would probably be one of the most bullish things for oil. Again, oil even got clapped today. People are worried about commodities. It's kind of interesting because gas prices have finally came down, but they are talking about this. And why would it be bullish for oil? Pretty much, if you start putting a price cap on how much you could buy Russian oil for, chances are Putin will probably cut a bunch of supply from the market, make the supply situation a lot worse. And now add that to everything about Europe and them getting gas cut off, and now they could even still sell to China and Russia. This would be extremely bullish. So decided to go for a play. I'm still in the futures. I might want to double dip, but this is kind of the first time we're hearing the news, or you're getting it in pieces. If it does get confirmed, that's going to be a bullish play, and I'm going to buy a bunch of oil off of that one. So watch out for that. And then finally, JP Morgan and XLF. The bank earnings are right around the corner, and given this jobs report on Friday, banks didn't really move much after the minutes. I think the jobs report may allow them to start leading into it, and before you know it, the premium and pre-earnings run-ups, they actually might show up. So I want to see if I could go for that again. Morgan Stanley did good, JP Morgan, and pay attention to some of the ones that had a good stress test. Those actually might be a lot better, but that was pretty much it. Again, short and sweet watch list. Please pay attention to the currencies. Watch out for that strong dollar. And now let's wait till Friday, even tomorrow. Again, you have trade balance and a couple of other things. But for the most part, this is kind of just the pregame leading into CPI. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, plant those roots deep. Don't get choked out by the thorns, and always stay excited. And that's a sign that the roots are deep, baby. But the Cole loves you. I love you. My voice is cracking. I'm clapped. I'm still gonna be there. And just get hyped, baby. 5 more months in the year, and just get ready for 2023. And even then, get ready for summer. We have a lot, and if you haven't noticed, everybody's all over the place. So it's gonna be good, Chad. I love you. Drink that water, and I'll see you in the morning. Peace out. I love you. God bless.